we had some commentary out from Fed officials over the last 24 hours or so. And then, of course, we're coming off the best week since June, looking at small gains today. What's your takeaway from what we heard from Fed officials and how this sets us up, not only for this week, but really over the next several weeks?
Thank you for having me. And it looks like Wall Street right now is positioning itself to anticipate you're going to see the Fed push back on this idea that they're going to be done hiking fairly soon. I think the Fed still knows that inflation is going to take some time to win that battle, and I think you're probably going to see that they're going to try to convince markets that they're not going to be in a position where they're going to be done hiking after a couple more meetings. So I think investors right now, they're turning defensive, and you're probably going to see that. I think expectations are still for the market to remain, I think, vulnerable to I think fading these whatever rallies we start to see emerge going forward. I think there's just still too much risk on the table, and I think overall, I think investors here are probably going to reassess how aggressive they go back into big tech. So that's going to be, I think, one of the main reasons why we don't break out much higher.
And we did see the markets obviously putting a lot of stock on that one CPI report coming in at 7.7%. And then we heard, of course, from Fed Governor Wallace saying, look, you're putting too much stock into this one print. The Fed has been very consistent, saying it needs to see this go down consistently. What are some of the risks that the markets are not pricing in, and how should people be really balancing their portfolios right now?
Well, I think right now you're still probably going to see that inflation risk remain elevated. I think most of the job losses that we're hearing are coming from the tech space, and that only makes up for 2% of the labor force. I think there's still a chance that wage pressures are going to remain fairly strong over the next quarter or two, and that's probably going to complicate when the Fed will pause tightening. So I think investors right now, they're really going to be in for a period of a choppy market, and I think the rotation in and out of defensive plays is probably going to be the strong theme going forward.
Yeah, I just want to clarify. As it came out of my mouth, I thought that could sound sexist, that I'm putting more stock in what Waller said than Brainerd. But she said technically nothing new, but what he put on the table was a 50-point hike in January, at least as I read it. Now, we all read different things into Fed speak. Just wanted to clarify. As for those tech layoffs, you got 11,000 from Meta last week, 10,000 from Amazon today, according to the New York Times. But the NASDAQ was up more than 8% on the week. What do you feel is ahead in big tech?
Well, right now, I think investors, they're kind of reassessing the global outlook. I think there's still, for a lot of these mega cap tech stocks, you really need to have a healthy China outlook. You need to have strong demand coming from Beijing. And I think there's still concerns that we're not going to have that robust growth period until next year. So I think there's probably going to be continued concerns that supply chain issues won't fully be alleviated until next year. So I think investors are going to become a little bit more concerned that, the Apples and Amazons might struggle here. But I think overall, there's still going to be a core holding for a lot of investors. But I think what you might see is that the percentage size of that might be a little bit smaller.
And when it comes to the news that we're getting in terms of Amazon, the reports that are coming out, and I guess expected to announce pretty significant layoffs, of course, coming on the heels of Meta last week, Snap, just to name a few of what we've heard over the last several weeks. What do you think this means just for the upcoming November jobs report? Is that good? Is that really going to be the first ugly report that we're getting of this cycle?
I think a lot of people have been waiting for that first real ugly report, that first negative print, and I think we're getting closer to it. But I think just still the service sector I think there's still a lot of strength there, and employers are very hesitant to fire. I think it's just this is a labor market there's still large pockets of strength in it. So I think we're probably going to see a minimal job growth, but I think we're getting closer to that negative reading probably in the next couple months.
And Ed, I want to take a look at what's been happening with oil. We're seeing WTI down 4.4% on the day. We're seeing Brent down about 3.5%. What are you watching in the energy space, being some of these caps and production caps that we're seeing?
Well, I think right now OPEC is running the show still. I mean, they're keeping this market tight. They've announced their reduction in production, and I think you're going to see that this is an oil market that it was a little bit depressed on all these demand concerns, whether it was China's rising COVID cases or weaker economic activity in the U.S., I think what you're going to see is that this market is going to remain tight. We've had some warm weather, both here and abroad, and I think that's going to start to cool. And I think that's probably going to lead to more demand, more gas demand, and some of that gas is going to be, helped out by some extra crude demand here. So I think you're probably going to look at $100 oil in the next couple months. And this market is, while demand is weakening, the supplies are just not there. So I think we're still looking at elevated energy prices probably throughout the rest of the winter.
You're a versatile guy, so we want to finish on the FTX fallout. What is your read of what happened in the last couple of days? CZ comments he's made and how Binance will try to prop up at least the industry for now. Where are we headed?
Crypto chaos is going to remain in place. I think there's still a lot more questions. I think we're still trying to figure out everything that's imploding with FTX. But I think the big question is, how are the other exchanges going to hold up? The regulatory scrutiny is going to be intense, and I think you're going to see a lot of investors right now. They're hesitant. Some capital investors. I think they're really concerned about whether or not you're going to see that robust return in that 3 to 5 year horizon that many were anticipating. So I think there's still a lot more questions. You're not going to have venture capitalists jumping back into this space anytime soon. So we're probably looking at a period where everyone wants to see exactly what other companies are going to be impacted by this downfall. And I think it's going to be a very choppy period for cryptos. But I think any sustained rallies will likely be faded.